Hey everyone, Andy Moss here with TradingAdventures.com for your look at the weekly charts this Saturday, July 25th. Last week we talked about trend lines, we talked about potential breakouts and follow through, we looked at rotation and established a couple things we'd like to see this week for more bullish indication of price action. And so now we're going to go through the charts on the bigger time frame, the weekly. We'll look at some smaller time frames too, but we're going to listen and look for the message of the market. No opinions, no projection, no preconceived notions, just what did the price action do and what is the message that the market is sending us. And looking at SPY for SPX first, this trend line is still below price action, but price action is below the shorter term moving averages, the 4-week and the 10-week here. We're still well above the 40-week, which is rising, and we're still above this VWAP anchored to the March 30 lows. So we aren't breaking down, but we did not get the follow through that we looked at as a possibility. So another week of selling across the major indices, and prices are now below flat moving averages, 4 and 10-week moving averages. And let's look at this trend line again for a minute. Last week I mentioned that there's no magic to this. This is simply jotting a note on a piece of paper. This is a sketch, this is a doodle, whatever you want to call it. There's nothing that says price will or needs to respect anything that we draw on the chart. Now, it did happen to close right on the trend line, so you could argue that the retest is still in place. However, I'm not nearly as concerned with that as we are with the second consecutive week of selling below the moving averages. And maybe you don't even like this trend line. Maybe this one makes more sense. Maybe you see this and you say, hey, the market looks like it might be putting in a double top here on the short time frame. It's fine. It's a matter of preference. It's a matter of examining the price and seeing what's happening. So far, we do have clear resistance here at about 75. We'll just call it 7,600 for round numbers. But we don't have a lower low yet. So that's what would confirm this double top, is if we were to go down and take out this low here and this anchor from the March 30 lows. That's down around 7,200, 7,230, something like that. So you're going to look at SPY, looks PY, looks the same, of course, or very similar anyway. And now let's go into the NASDAQ. The NASDAQ is putting in a new lower low. It's below this previous low, it's below last week's low, and it's testing this area around 686, which has the VWAP also anchored from that March 30 bottom back here. So this is a critical area for the NASDAQ and the Qs, because if we lose this, there's a lot of open air down to this rising 40-week moving average. It closed this week at 644.39, and so in coming weeks it'll continue to rise a bit. But 650s, 660s, somewhere like that on the Qs, if we don't hold, could look pretty obtainable. RSI still above the 50% mark, so that's not broken down yet. Volume still light by the average, which is normal for the summer. And I'm going to shift gears here for a minute because I shared this update on X and in the notes yesterday about the Qs. This is the roadmap chart. This is the stock market index futures on a 1-hour time frame. Several indicators here, but most notably is the 5-day moving average, which is a true 5-day moving average calculated down to the minute or the hour in this case. And we're below on 4 out of 4 index futures are below declining 5-day moving average. That has been the case for many days now and has not changed. We did see an attempt to get above, but this is what I really wanted to look at. I shared this on the notes and on X, and yesterday it looked like we had the potential for a failed breakdown, because price came down here in the morning and then went back up in the afternoon. Let's just get a 2-minute chart here on the Qs and show you the intraday action. This was the opening at 9:30 a.m. It came down, put in a local bottom, and went back up. And so this is just before noon, and that's when I shared that update. We were back to the right chart here. This was looking like a hammer candle that had been below these key levels and then came back. And I noted the potential for a failed breakdown. And we watch those because we know from failed moves come fast moves much of the time. That did not develop and hold up throughout the end of the day. We see The price went up here. It tested or maybe just got a little above the opening high. This was at 9:34 in the morning. It tickled that level and then came all the way back down. So that's not the same picture that it was earlier in the day. And that's a key update because it's a pretty sloppy, lousy close to finish down here on the session at the lows of the week, of the day, that kind of thing. So not a great look there for NASDAQ. We could still get a shakeout. It could still develop into a failed breakdown. Anything is possible, and we'll be watching for that next week. But as it stands now, we've got lower lows, lower highs, below declining 5-day moving averages on all 4 of the index futures. So back to the bigger time frames here. The Dow Industrials continue to hold up better than the larger cap indices. We've got 3 pretty orderly weeks of selling now. Between the moving average are flattening out a little bit on the 4-week, and the 10-week is still rising, and plenty of reference levels below. IWM, the small caps, another red candle here in the sequence relative to DIA, but still holding up really well. It's above this extension, this 1.618 extension. It's very near the moving averages, which are coming together, getting tight. RSI still above 60 and in the bullish upper half. And likewise, we've got some reference levels down here if we were to see a little further correction. Bitcoin did not hold the key level. This is another one I've been updating on X lately. We were looking at 66.5 as an area that Bitcoin really needed to get and stay above, and then move on beyond 77.5, which is the VWAP anchored off of this recent high. That did not happen. It's back down testing the rising 4-week and looks pretty weak here. So no bullish development or durable bullish development there on Bitcoin yet. And in the meantime, the dollar index, these are the US dollar index futures that we look at every week, and they are trying to break out. This is a higher high on the weekly close. It's firmly above, for now, this shaded area, which we've had on the chart for a really long time. And so a bigger move here, many tests to finally get above, and it did that, and now it's been consolidating and retesting that for 5 weeks now. So that tells us that the dollar, the path of least resistance for the dollar is going to be higher going into next week, and we can see how that affects stock and commodity prices. VIX is still, I won't say amazingly quiet, but it's interestingly quiet given the shakeups in the market. Down here below 20, it's up a little bit from this low of 3 weeks ago, but not really running away. Now taking a look around the world, and it's some of the other asset classes. We've got the All Cap World Index. This is everybody except the U.S. Nothing really exciting here. Still continuing to grind lower or drift lower, still testing this anchor off the March 30 lows. You know, that's a continued theme across many charts that we look at. China trying to hold up this bounce. This is another potentially failed breakdown here. It's a sharp dip followed by a fairly sharp recovery. 2 weeks down, 4 weeks up now, so not quite as sharp. But this is the level that's getting retested and needs to be recovered. It tried to do that this week and closed below, but call it 34.80, 34.79 here on FXI is a level that if you're bullish China, you want to see the price action get and stay above this as the shorter term moving averages start to rise and curl up. Its RSI is in the bearish lower half still, and so it got a lot of work to do to remedy this situation, but it's trying so far for the last 4 weeks. Bonds got a lot of commentary and mention this week, and rightfully so if you're looking at the price action. The aggregate bond index breaking down and moving lower here. We noted this potential last week. The treasury bonds, pretty lousy action here, and high yield bonds breaking lower as well. This did not hold. This was the early indication last week, and it got a lot of follow through to the downside last week. So while we're at it, we can go ahead and look at the opposite side of that. Yields, here's the 30-year treasury yields really testing this area. Let me zoom the chart out here a little bit and look that if we get up of this and stay there, that's new area, that's new territory for treasury yields. It's something we haven't seen, or at least not in a very long time, and that is notable. So looking at the 10-year, not quite as pronounced, but still making progress higher, and just something to be mindful of if you like to follow that kind of thing. GSG, we've been looking at less and less. We'll go straight to crude. Crude is on the rise for the third week in a row, and we're going to take a look at the energy sector here in a minute and see what the impact was on that, because we do have some bright spots in the market as this rotation continues. Gold futures continue to hold this support level here, although pressed down by that declining 4-week moving average. And so now let's go into some of our relative strength indices or comparisons. And pay attention here and notice what the message of the market is telling us. These are the below the surface, the subsurface characteristics that tend to give me a better idea of what is going on and where the rotation is happening. And this is growth versus value. And generally speaking, as I always remind, in favor of growth means a more bullish stock environment. In favor of value means that folks generally are positioning more defensively. And we see continued strength towards the defensive side of the market, with value leading the way lower here in this comparison. Another one of those is consumer discretionary versus consumer staples. The things we want to buy versus the things we need to buy, and we've got a clear move and a strong move towards the staples here, which is again another potentially defensive message from the market. That's what the price action has done. That's where people are putting their money. It's in the more defensive sides of the equation there. So looking at this previous price action, maybe some potential support in this area here. We certainly want to wait and see and let the market tell us which way it wants to go. High beta versus low volatility. No surprise here. We've got a continued shift towards the lower volatility areas of the market. And now for some more individual or index groups. Semiconductors still under pressure, but it's an inside week here. And this is 5 weeks of decline. Now, I guess this was a little bit of a pop relative to the weekly close, but overall the trend is lower for 5 weeks. It's testing this anchored VWAP from the March 30 lows. That theme continues across many different areas and sectors, and it's an inside week here, so some indecision. We saw mixed strength, mixed action in the semiconductors through the week. Some moves looked sustainable and then failed. Or at least if they didn't fail, they gave back most of the gains. So no resolution there for the SOX. But again, it's worth noting and pointing out that we're below the moving averages. It is consolidation, but this is still really a very mild move after the magnitude of this run-up since the March 30 low. So nothing terribly concerning there on the SOX, but just something we have to pay attention to. Similar situation with XBI. Although the move was not as big, it was a very pronounced move, and now we've got 3 weeks of consolidation. We're below that 4-week moving average, but otherwise still look pretty decent for the biotechs there. And software just wrecked. It just given up the ghost. It's below the declining 40-week moving average. It cannot get above and stay above. And as a matter of fact, it puts in a new recent low here for the weekly close across these last several candles. So software certainly not out of the woods yet. And let's look at financials first before we get into the Mag 7 names. This is very orderly bullish consolidation here, or rest in front of this previous high on the financial stocks here. They're holding up very well. So this is where the rotation is finding strength. As we see buying pressure come out of certain areas of the market, it is continuing to flow into other areas. That is the definition of rotation, and that's what keeps markets alive in the meantime while some of these other areas are correcting. Energy stocks. This is a pretty solid breakout here on XLE, and that coordinates with the crude oil futures that we looked at. Now, is it sustainable? It's run a long way in 3 weeks. Crude has run a long way in 3 weeks. Would not be surprising to see some rest and retest of this area, maybe as the moving averages come up here and catch up to the price. And back to the Mag 7 names. Pretty ugly here, and last week's reversal candle was confirmed. We're back below all of the moving averages. There is the VWAP off of the April lows of last year that were tested. We'll see if that holds again, but we have the potential here for a lower high on the Mag 7 names as a group, And the breakdown of them individually, Apple is still the leader. It's one of the only names making, or the only Mag 7 name, I believe. We'll find out in just a second, making new highs. It didn't close above last week's high, but it's holding up here very well. The daily chart on Apple shows a really strong day yesterday, but notice down here we've got earnings in about 5 days, July the 30th. So that'll be a big question mark for Apple, but so far it's setting up very well into the report. The challenge for them will be, can they announce news that's good enough to keep that move going, or is this been a bullish rise in anticipation of the event? We'll find that out later. Amazon, this looks like the Mag 7 as a whole, a lower high here. We do have a closing low that is lower than this closing low. We haven't taken out this level yet, but not looking great there for Amazon. Same with Google. Same with Meta. Cannot get and stay above this long-standing trend line here. Microsoft, we already looked at the software sector. This is a pretty miserable looking chart, although it is above the VWAP from the lows of a few weeks ago. Nvidia still just stuck and going nowhere. Notice the moving averages are crisscrossing back and forth. We've got this orange line, the anchored VWAP from the March 30 low, and it just can't really get out of its own way. And then finally, Tesla, just a nasty candle here on the earnings announcement week, and below all the moving averages, below the previous lows, and some messy, choppy action back in this area. But this could be, maybe it found some support here, maybe it's over here, maybe it's down in this area. Won't even take a guess. As for now, Tesla is in a newly resuming downtrend on the weekly chart, and just looks pretty ugly there. So now let's look at some breadth and participation measures. And interestingly, the number of S&P 500 stocks above a 50-day moving average continues to rise, or rises again this week, I should say. So we've still got decent participation underneath the surface level there, as the number of stocks above a 50-day going up, and the number of stocks above a 200-day is holding very steady. So that looks pretty decent. Bullish percents, no real change here. We've got potential for another O, but not quite there yet. Still chopping around there. Much lower now, and down in this area of interest. We're nearing that 30% level, which is, I think I mentioned last week. The washed out levels are where we really take note of the bullish percent indices, because when they get down here, think of it like an oscillator. It is an oscillating indicator, and when it gets down here, and there's so many stocks on a point and figure sell signal, first of all, it's just another lens to show us that the market participation in this group of stocks is very weak. This is the NASDAQ 100, so similar to the Qs. But the other side of that is, once so many stocks are on a sell signal and have been taken down so far, how much more selling can there be? And so it's a little counterintuitive, or a little bit of a counter indicator when we get down in this level. Oftentimes it can signal that maybe we have potential for a bounce. So that's something we can think about and watch for early indications. How do we do that? We look at the smaller time frames. Go to the daily chart, go to the 30-minute charts on the indices or the ETFs, and the roadmap of the futures, which I look at every day. And so that's what we'll be looking for into next week on the NASDAQ, and the NYSE still chopping around here. So I'll probably stop updating these so much unless we see something like we just did with the NASDAQ. There's just not a lot of news in there for those, and probably no reason to visit them every week. But I'll keep looking at them and point out meaningful instances when they come up. So what does it all mean? We've got the message from last week was we're looking for some continuation or some follow through, or for the last 2 weeks, I should say. We haven't gotten that yet. The market's still a bit messy. The S&P holds up. The Qs are still under pressure. We've got the Mag 7 names looking nasty. We've got semiconductors consolidating, and we have areas of strength we have strength in the more defensive areas of the market. So the rotation is still very much alive, and maybe we see things start to rotate, buying power start to rotate back towards the more aggressive areas of the market, but that hasn't happened yet. From here, it could flatten out and chop around. It could be a boring rest of the summer or a frustrating rest of the summer and beyond. Or do we see that rotation back into the more aggressive growth-oriented areas of the market? Or do the stronger areas this week start to roll over and really take the whole market lower? Those are the potential outcomes there. I don't know which one is more likely, which was going to happen next, but so far the price action is telling us that we're moving in the defensive direction. So that is what I take as the message of the market. The leadership is narrow, the defensive behavior is continuous. Financials and energy remain notable exceptions. We've got some strength there. Again, here's the look at the crude oil chart. And the market isn't falling apart. It's just simply continuing to test and reward patience and selectivity. So as always, I'll keep an open mind, let price lead the way, and adjust as the evidence changes. That's our job, not to predict, but to interpret. Just like we looked at the potential for a failed breakout down on the Qs yesterday that didn't develop. Those are the little nuanced moves that I want to pay attention to and try to catch those early indications and see if they develop into something more. It doesn't happen all the time. Matter of fact, probably more often than not, it doesn't happen. But those are the things that we have to be watching for on a continual basis. Next week could have some firecrackers. We could have some excitement. As I mentioned, the boring summer overall, or choppy summer overall for the market. Next week, we have some things that could have potential to shake things up a bit. We've got, looking through the calendar here, we've got a lot of earnings. We've got PCE, we've got Fed rate decision on Wednesday the 29th, PCE on Thursday the 30th, and what else? Let's see, PMI on Friday. But then from earnings, and I'm not going to go through the whole list here, but I know we have Apple. We've got lots of big names reporting next week. So make sure you know what you own, make sure you know when they report, and make sure you're positioned accordingly. And I'll keep the updates coming. We'll see what happens in the overall market and continue to read the price action and listen for that message. So have a great rest of your weekend.